Good morning. It's Friday, August 18th, and I've been goofing around on YouTube with you effers. Yeah, I will say this at the beginning. I will say this at the end. No podcast next week. No YouTube Live next week. I know there's going to be a bunch of people who miss me. You can sign up for the newsletter. The newsletter will still be there. The newsletter will still come out. I will do my best. Just so you're aware, I am getting my wisdom teeth taken out. So, I'm 53 years old. I don't bounce back like you degenerates who are 19 years old getting your wisdom teeth taken out. Even 13-year-olds. Your jaws are soft. I got an issue. Now, let's talk about Bitcoin. Because, and I'm going to bring this up again live, but here's a chart that I will put in the newsletter. And it's the Bitcoin flash crash that we had last night. You can see it's just down to 26,000. Don't know exactly what happened. And this is, let's see, BTC BUSD is, I think, the symbol that I can pull up. There it is. And essentially, you can see that you can use my 4-hour algorithm to trade Bitcoin, to trade crypto. You can buy this, you can sell it. Here's the thing, the performance chart of my 4-hour algorithm, it makes you 25% over 5.5 months versus 18.7%. I want to go, this is screwing up. Hold on one second. But you can trade crypto. And that's one thing that TrendSpider has that I think is a benefit to anybody that signs up, is that you can trade crypto, you can trade stocks, you can look at bond funds, you can do a bunch of different things on TrendSpider. So if you want 25% off, the link is down below, and you can get my algorithms. I basically send you a welcome letter with it's links, and it's hey, well, thanks for subscribing. Here you go. But yeah, let me see if I can. Yeah, there we go. And I can do this up to 2 years, 2,000 candles. Apply. Let's do a 2-year thing because I do want to. It's 11.4 months. You make 37% versus buying and holding the asset. You make 24%. So the algorithm works even on Bitcoin. But yeah, we had a Bitcoin flash crash. Not the reason the Dow is down today, not the reason that anything is down today, but we did have a flash crash. So if you're invested in anything crypto, you probably have lost some money today, and a good amount of money, not a small amount. On Thursday, the Dow closed below the 50-day moving average for the first time since June 1st. I don't track the Dow for very much. But what they talk about when you see headlines like that, it's basically the daily. And you can see the Qs crossed the daily way back on August 10th, my birthday. The 30 stock index tumbled 290 points. Meanwhile, the S&P declined 0.77. The Nasdaq slid 1.17. The Nasdaq, because it outperformed this year, has been sliding even more. So you do have to worry about, I'm going to move this back to 1,000 candles. You do have to worry about, if you are tied to the Nasdaq like I am, you have to worry about some of these things outperforming me. And when I mean outperforming, it means you're losing more than the indexes. The 10-year Treasury yield on Thursday rose to its highest level since October 2022. And if you subscribe to the newsletter, I said yesterday, SPY, where are we going? Well, the October lows are down. And when you click on that link, you can see, this is what I posted yesterday. You've still got 20% down to the October lows. If you go 20% down, we're at about 370 on SPY. So if you just go 20% down from the highs, which was, again, August 2022 last year was the highs, through October, we took it down 20%. If that's the case this time, and this is why I want you to subscribe to the newsletter, because you can see this kind of stuff in the newsletter. But if we go down there, you're at about 370, and we're continuing down. On the 4-hour, you have no confirmation on this. And it is 100% bond rates that are taking this down. Here's a quote from, I think it was Joe Terranova or somebody on, maybe, I think it was Guy Adami actually. Rates are not going higher for the right reasons, in my opinion. This is now a confluence of events going on globally. We're at levels we haven't seen in quite some time. If yields continue to move like they're moving, there's going to be some ramifications for global equity markets. You saw this morning Evergreen, which is a Chinese real estate firm, filed for Chapter 15, not 13 in this country. That basically protects them against U.S. creditors coming after them. And that's just the first thing in China that's become a weakness. Higher for longer, it's what's pulling the stock market down. The stock market got ahead of itself. It thought, oh, you know what? The economy's strong. We're going to see some rate cuts later this year. Well, it's clear from the Fed minutes, we're not going to see rate cuts this year. So I want you to understand, this is not something where I think we're going to bounce, but it is something where I think we have opportunity. And when you take a look at a weekly chart, and I will post this in the newsletter, but when you take a look at a weekly chart, if we get back to the 50-day on the weekly, that's still 13% down. If we get back to the 200-day, it's another 2.45%. So we have a ways to go. Remember, on a weekly, the Nasdaq has touched the 200-day back here in COVID. And I think it broke it during the housing crisis of 2008. I think I have to go to a monthly on that one. But you can see here in the bear market last year, we touched the 200-day. So what I want you to do is be patient. There's no reason to get in long right now. You're on a Friday. There's no reason to trade stuff. There's no reason to buy stuff. I will give you some stuff later that I think maybe you can buy as protection. But remember, higher for longer is what the Fed is doing. The banking crisis that happened, that was because the Fed raised rates so quickly. We don't know the ramifications of raising rates this quickly. The market is telling us something. Also remember, bond rates. I go over bond rates from this Fidelity page. If you just go to Fidelity, go to News and Research, just go to fixed income. You don't have to be a subscriber to see this because I'm not logged in right now. But you can see the US Treasury, the 10-year is at 4.29. That we haven't seen that since October of last year. As these rates continue to go up, you will see equity start to slide. Why? Well, at some point in time, the Fed is going to lower rates. And at that lower rate, if you've got a bond, let's say tomorrow they lowered rates, and that 10-year is at 4.29. Well, if 4.29 all of a sudden goes down to 3.75, that bond is actually, the actual asset of the bond is worth more and people can sell it. So you're seeing an opportunity where people are buying bonds. They're guaranteed 4.29% for 10 years. So each year they'll make 4.29% and it's tax-free. And the U.S. government is going to pay it because the U.S. government always pays their bonds. So it's never 100%, but it's 99.99 and there's 7 nines there. So it is, 100%. But at 4.29, if all of a sudden somebody can get a 10-year at 4.1, then that 10-year bond in 1 year is actually worth more money. So people may flip the actual asset. So yeah, it's kind of a once in a lifetime because bonds haven't done this in my lifetime, but that's what's taking this down. So I want you to be aware of it. Now, what am I doing? I'm kind of staying patient. I'm looking at opportunities. Brad Ferguson yesterday added Shopify at $53. It's at down 3%. It's at $51. He adds a little bit, and this is what I was trying to tell the YouTube audience before, is when you're adding in a down cycle, I'd rather see you add small chunks. So I usually say, hey, add once a week for 5 weeks. Say you got $1,000, add $200 for once every 2 weeks. You're going to want to take a look and maybe do it 10 weeks, not 5 weeks. Maybe do it 10. So rather than buying $200 5 times, buy $100. And when it turns around and you get confirmation, go ahead and buy more. But you can see Shopify, we had a buy signal with the MACD at 55. I just don't think that the market's done taking us down. And you can see that gap down to 48. I will add more Shopify because I think it's a $70 stock. I will add more Roblox because I think it's a $40 stock. I will add more PXD because I think that's a $250 stock. You have to pick which ones you want to own. That's why I say good companies with good earnings, with good management, you buy. PANW is one of those. This one has not done really well. Since August 2nd, 2 weeks? You were at 251. Now you're at 206. The only difference in this stock was, I think it was Fortinet reported, and they reported a weak quarter. I am holding. I have not trimmed Palo Alto Networks. I think it's in my brokerage account. It will trigger a tax event. This gap up here between 225 and 235, you will see filled at some point in time. We have not filled down below at 168. So do not think that just because they're reporting after the bell, oh my God, it's going to pop back up to this 250. This is one that is currently not making money. They are, I think they're still negative on there. No, they are making money. So they turned it, I guess, last quarter. But the forward PE is 41. It's not crazy. The current PE is 325. That means they have to continue that enormous growth. And we've seen, even when companies trigger this enormous growth and they beat, that they still don't go up. So be very careful with this one. I probably wouldn't get into it, see how it's lost its confirmation in the 9-day. That 50-day is heading towards the 200-day. It will determine, these earnings will determine where you get that 50-day, if it's going to do a death cross or not. Let's talk about the grade 8 because in my mind, I think there's some great opportunities. Netflix, it dipped below 400 in the pre-market. It will dip below 400 today. It will dip below 400 next week, I believe. I don't think that we're done going down. So Netflix under 400, I think I'm going to add to that one. But I'm waiting for confirmation. Again, you have to be patient. I'm just sitting here waiting. I'd rather miss the first 10% and get the second 10% in a run. But I'm waiting. Apple. There was a question on Apple. Somebody bought, I think Lucas bought it at 187. And he's like, hey, what should I do about Apple? Just sit there, add more. Yesterday was dividend day. I got a couple $1,000 in dividend. It went and bought Apple. Am I selling it? No, I'm buying more. Amazon. 132. By the way, Apple, I do think it gets to the 160 handles, 165, 166, somewhere in that neighborhood. I think that's where you just start backing up the Brinks truck and you go to about 220 at some point in time next year. With the Apple Vision coming out, maybe they do something crazy and do some pre-order stuff around Christmas and people pre-order it and it becomes a big thing. Who knows? But there's a lot of questions around Apple and it's multiple. They buy back a ton of stock. I'm not too worried about it. Amazon. I said anything under 140, I think you can buy Amazon. It's coming back here to fill the gap earnings at 129. I think that's where you start adding to it. You start adding to it. I will not add to this one until we probably get down to the 200-day at 120. I do think that that's where you're going. Google, on the other hand, has been going back and forth around that 130 point. And it's kind of been using the 50-day. It's the only one that seems to be using the 50-day as its support level. Once it breaks through that, I think you get down to the 123. I think you start adding to it again. Meta. We talked about Meta. It popped from 300 to 330 on its earnings. I held it. I am happy to hold it. I am happy to add to this one. I think that you get back down. I don't know that you cover this gap at 214. I think that's too extreme for this stock. I do think that you get back to the 200-day at 265. So, again, these things are very, very simple. One that I want you to watch is NVIDIA. It's in our core portfolio. You guys know I bought it at under 300. I bought more at 460, I believe, somewhere in that neighborhood. 450 and change. I bought a couple more lots. It's at 423 right now. This yellow line that you see is the gap, and that's the top of the gap from the last earnings beat. Now, here's what you have to know. Next week, they report earnings. It's August 23rd. I will not be on air. I will not be doing the podcast. But I want you to take a look and I want you to watch this, because here's the thing. If for some reason you get a beat on NVIDIA and they raise guidance and this stock falls, we're not done going down. This will bring the market down. God forbid if that happens. This will bring the market down to that 20% that I talked about on the Qs. You will see it tumble to the October lows again. And bond rates are continuing up. You will see this thing tumble. That's when you start buying. Remember, good companies with good products, with good earnings and good management. These are things you want to own. NVIDIA is one of them. Tesla. We've talked about Tesla. I said it's coming back below 200 at some point in time. You're at 216 right now. You broke the 200-day. The next support level in my mind is probably when you had this golden cross right here at 178. I think you get down to the 180s, and I think you start adding to it. Microsoft, we can talk about Microsoft, because Microsoft with its, I watched a Bloomberg video with Microsoft CEO being interviewed about the AI stuff. This is one you want to own. Do you want to own it right now? The algorithm got you out, got you in at 323 with a little bounce off the 200-day, but it couldn't hold. I think you probably come back down to the 280 mark at some point in time, maybe 290. If you don't have a position in this, I think you can start your position in it. Now, I will include all of these symbols in the newsletter, but AAPD, if you don't think we're going down on Apple, hedge yourself a little. If you got a position in Apple and you don't want to sell because it will create a tax event, AAPD, look at this, $20. Back here on August 3rd, when Apple really started to slide right before earnings, 2025. You're at 2263 right now. Nice 10% move. AMZD. I posted all of this in yesterday's newsletter. Maybe I didn't make it clear enough. But this is what you want to do to hedge your bet. Right here, 1982. You can see the gap up here to 21.28. You're at $20.78. You're going to fill that gap. AMZD. GGLS. This is a one-time bear of Google. You had a buy-in right here at 1920. You're at 1913. This is the one that's been capitulating, and I think it's dangerous to kind of play the short on this one. FBL, because that one hasn't pulled back the way that the others do. FBL is a meta bear. And I'm sorry, this is FBS. Sorry, FBS. I think it's FBS. No, I'm gonna have to find the short of Meta. Let me see. Meta bear inverse stock. One time short ETP levered shares. It is. Let's see. This will pull it up. This is, by the way, this is all you do. I agree. What the hell? It's, I don't even know. Where's the symbol? Where's the damn symbol? Why one time short ETF, more levered ETFs, 2 times. Minus 3 times meta? Ooh, what's this one? I can't find the symbol though. This is Italian. This is outside the country. Don't do that. I'll find it. But yeah, you want to short Facebook. I think Facebook isn't done. If you think that NVIDIA is going to pull back to that 360 mark, NVDS, this is a 1.25 times bear on NVIDIA. And it's been going kind of crazy. You can see it reverse split here, 5 for 1. It 38.15 was the buy-in. It's at 41.54. And finally, Tesla. There's 2 symbols on Tesla: TSLQ and TSLS. TSLQ, they're kind of the same. It's nothing like crazy, but TSLQ 31.51, and you're going to that 200-day at 40. So you can still get about 10, probably 10% in this one, but it's overbought. Again, you want to look at these things. Now let's talk about scans and opportunities, because when I say scans, these are just stocks that show bullish tendencies right now, but it doesn't mean, oh my God, it's 100% this is going to make money. This is just in my algorithm. These show the likelihood that you could make money on this. I think Target at 130, 163, I think it's a no-brainer. I think you had the MACD cross a couple of times. It's at 130, 121 right now. I think anything in the 120s, I think you pull the trigger on that one. It's too good of a company. The issue is the management. And they're just not doing a very good job of managing things right now. Etsy, this is one that I own, that I've ridden all the way down, 74.97. They've had their earnings. They made good earnings. It's just not one that people like to have. I mean, it's still expensive. If we go over here and we look at Etsy, no, come on. I can't type today. Etsy, they're not making money. Forward PE is 26. It's not crazy. You want to be in this one when they do announce that they're making money, but right now they're losing $713 million. Year to date, it's down 40%. You can see August 3rd, downgrade Bernstein with a $105 price target. Well, you're trading at 74. Everybody's got higher price targets on this one. You can see it's all sales. President and CEO sold at $95. He basically did the options exercise, $95 back on August 2nd. July, $101. This one has just slipped. You can see when it got back up there, people started selling. And that's not good when the management starts selling. So Etsy's one that I've got. Uber. Uber is in the core portfolio. I bought this one at 46. It's up 0.25 today. It's still above its 200-day. I think that 200-day probably provides some support at 40. I will probably add more today at 44. And the reason I'll add more, it will be a small buy, but I don't want to miss this going to 50 because it will go to 50. This is a company with good management, good earnings, good product, and it's just an overall good stock to own. Now, the algorithm doesn't do a very good job. It loses you 30% versus you losing 4% with just buying and holding over 25 months. So just over 2 years. So Uber is one that has a cross up. I like it. Taiwan Semi, I said don't sleep on Taiwan Semi. This one under 100, I think it's a great buy. Right now, I got to buy at 91.59. It's below that 200-day. You can see the couple of times that it pulled under that 200-day since the beginning of the year. We've seen a pop. Now, if we're in an actual bound, just a pullback, this is a great one to buy. If we're in an actual recession and you're going to start to see things break, this isn't a good one to buy. Because let's take a look at how this one has traded on the weekly. If we're in that recession, we pull back to where we were last year, you're going to see this one continue to go down to that 50-day to about 86 or 85. But it's a good company with good earnings, with good products, and good management. The issue that you have with Taiwan Semi is the whole China thing, if China decides to actually invade. But I don't think that they will. An energy name that we like is Albemarle. This is a lithium company. They have just slid completely. Do I want you to buy at 183? I'd rather be in oil and gas with the energy company, to be honest with you. Something like ET, which is a cross-up. And we've talked about this for a couple of days. ET at $12.65 is where the owner bought. $12.75, it got you out right afterwards. You kind of just should have stayed in. $12.90. And if we go over here, the one of the reasons that you want ET is even though it doesn't make you a ton of money in capital appreciation because you're only 5% off your 52-week high, it gives off a 9.65% dividend. So ET I like. Yesterday I mentioned, and I wanted to mention this, Lemonade. Lemonade is a insurance company. I said it was a loan company. I screwed this up with whatever the other insurance company that's a high flyer as well, Upstart. I screwed that up. Gave us a buy at $14.53. You're below that. I said it's a little bit risky to buy this one because I think that gap down there is probably a little stronger at $11.58. Wanted to point that out. And the final thing is Southern Company. Southern Company is just a utility. Have we bottomed on utilities? Obviously not. Yesterday, the trigger was 68.55. Today, it's at 68.02. It's your ex-dividend date, so it probably is just the dividend that was taken out. I reiterate, no pod next week, no YouTube Live next week. I'm getting my wisdom teeth taken out. Couple of things. If you want any of the links in this podcast, make sure that you're signed up for the newsletter at dailystockpick.substack.com. If you miss any of these links or you want the links, go to Linktree, linktr.ee/dailystockpick. There's your 25% off TrendSpider. You can sign up for Visible Phone Service, which is the phone service that I use. The one that I really would like you to do is Webull. I think signing up for Webull, you get that desktop software. I think it starts you. If you're not going to sign up for TrendSpider, at least have some desktop software. You can't watch charts on a phone. You can do short-term charts on a phone. You can't look at long-term charts on a phone. You can't trade with charts on your phone. This is why I hate Robinhood. There's a couple of things that I hate Robinhood for, but that's the one thing that I hate Robinhood for. They don't have desktop stuff. They also charge you $80 when you pull out money, blah, 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 the whole thing. But all of these links, you can give me with Cash App, give me with PayPal, give me with Venmo, anything that you want. Buy Apple on Venmo, on Webull. Sign up for Venmo if you don't have it. The podcast is there. You can join our private Facebook group, or you can follow me on Twitter, on Instagram, YouTube, Twitch, Substack. No, that's Spotify. That's Apple Podcasts. That's Substack over there. If you don't have social media, you can just email me. That's the email thing right there, and that's a way to link just to tip me. Another thing. It's episode 100, the Darwin Awards. And this is where I talk about getting high while hiking and burning my retinas. I got high, just full disclosure, I got high after I burned my retinas because with snow blindness, there's nothing you can do other than withstand the pain. So the doctor sent me to the dispensary in Colorado. But give it a listen. I mean, I think the first story is probably one of the best ones. But I do like this. I enjoy doing the hiking podcast with Steve and a bunch of buddies and stuff. It does look like the market is turning around a little bit. I do see some green shoots. I see some green shoots with Cleveland Cliffs. Costco, Devon Energy. Energy is coming back. Coca-Cola seems to be bouncing off that. Meta is still down 3%. Nvidia is still down 3%. Netflix at 401. Oxy is up a little bit. PANW kind of came back a little bit. Pepsi's up. PXD up a little bit. Roblox is up 1% to 28. Snowflake is just still down at 145. UNH under 500. I would stay away from UNH right now. I'm thinking about maybe selling it over 500. I think it's in a retirement account once it gets over 500 again. A big one is Walmart. Walmart's up 2.5% because yesterday they had great earnings, really good earnings, raised guidance. This one at 159.16. I think it's $165 stock. I think we get to 170 probably in the next few weeks. Not a great percentage move, but if you want a good company that is continuing to grow, mainly their gains were in e-commerce and in grocery. And in fact, I shop at Walmart for my groceries. And it was shocking to me how much I can save at Walmart over groceries. And I'll just give you a for instance. And yes, I'm frugal like that. I live on like a $40,000 a year stipend that I budget for myself. But just to give you an example of one product, I buy maple syrup, and I buy those jugs of maple syrup because I am completely addicted to sugar. I like natural sugar more than I like false sugar, but natural sugar is something, and I love maple syrup in almost everything. But I eat overnight oats almost every day, and so I buy this huge jug. Well, the jug at Publix cost me, I think it was $18 the last time I checked it. The jug, the same jug. And it's it's just a different label on the jug, but it's the same jug of maple syrup because I think every bottler of maple syrup uses the same thing. The same jug at Whole Foods is like $21. That same jug at Walmart is $15. I'm not saying that your Walmart is going to be as good as mine. Mine has an absolutely fantastic grocer who's in charge of the grocery section, and I am able to email and tell them what I want. They're able to get that stuff for me. And I have organic fruits, vegetables, everything that I need at Walmart. There's some stuff that I don't have, so I'll go to the regular store like Publix and stuff like that to get it. But I can tell you, I went from spending about $110 a week at Publix down to about $70 a week at Walmart. That $1, that 50 cents, that 40-cent difference on 100 items that you buy, 50 items that you buy every week, it saves you a bunch of money. So Walmart, I added to the stock once I started shopping there because I saw how much money I was saving. And I said, other people are going to start doing this too. The way Walmart makes money is they'll sell groceries at a very slim margin, but they get you in the store. And then you see a t-shirt for $7 that costs them $1.20 to make. Or you see the TV at $400 and it's a doorbuster. It gets you in there. And you know what you buy outside of that? You buy a streaming service or you buy an Xbox where they can make some money. So again, my kind of overall guidance for this, just be patient. I think we've got more downside if you want to play those levered ETFs. And remember, the newsletter yesterday did not just include single stock ETFs. If you go and click on those photos of those levered ETFs, and for instance, go to Direxon, this Direxon link, and you can pull up a ton of levered ETFs. You can say bull and bear 3 times levered ETFs. You actively manage tactical ETFs, single stock ETFs, bears. You can buy the bears. You can buy mid cap, you can buy small cap, sector equity. All of these things here's our DRV and DRN. Here's our DPST, which by the way, let's take a look at DPST. This is where I find that stuff is you find a list of this stuff that is out there. DPST has just turned around. You can see 44% and you're back at 67. Let's see where our Boyle is today. Again, I wouldn't buy these on a Friday. Triple levered and single levered ETFs, they're a little bit tough to manage over a weekend where news may come out about something. But Boyle's down at 64. You're in at 66, hasn't gotten you out. You're still in. But I think it's a $70 stock at some point in time in the next couple of months. So I don't think that you necessarily get out. I think it's just hold on to this one. Remember, if you want to check the price of natural gas, just go over here to FinViz, the front page, down here on the bottom. You can see natural gas and look at the price dip just kind of today. And then it kind of, came back a little bit. But yeah. So I will talk to you guys later. Thank you for the prayers on the wisdom teeth. I will miss you, but I will be in touch, and you are free to email me. Just please don't expect like an immediate turnaround like I normally have. If you ask me a question on any of the socials next week, your boy just downloaded Madden 23, so I will be, or is it 24? I'm not sure which one it is, but I downloaded the demo. I'll be buying that and playing that on Xbox all week. So have yourself a great week. Have yourself a great weekend. Let's hope that this isn't the end of it. Deere is an absolute 100% buy. Good earnings. Got pulled down just because it's been a crazy market. But Deere had a run up. I mean, let's be honest. Deere had this huge run up. You can see right here the pullback on the earnings. They made $10.20. I mean, they're not going to grow like that much. Look at that, $6.55, and they dip down to $360. You're going to see this one kind of come down to that 200-day. You may see it come down to this area, 379. Buy it at 399. I don't see how you can basically take a stock, a big heavy stock in this is a mega cap from 436 down to 390. What the hell happened? Hold on, we need to find this out. I do not own this one, but I've been wanting to get into it. $450 is the 52-week high, and you're trading right now at 398. I don't see Deere slides on questions over how long farm boom can last. Yeah, Deere earnings smash Wall Street estimates. Here's why the stock is falling. Let's see why Barron's. Barron's is going to tell me, oh, I need you to sign up for something. Let's see. I bet it's not a paid one. Deere stock was down 1% in pre-market. Yeah, fuckers. No. Okay. We're done there. But yeah, check out Deere. I think it's an opportunity. I just think, yeah, they blow away earnings. This is the danger that I see in NVIDIA, is that they blow away earnings, they raise guidance, and you see it down to that 360 level. So, yeah. Okay. I will talk to you guys later. Say bye.